Good morning, everybody. It is 8:45 a.m. Friday, January 19th. I was about to say February, but we are heading into February in 11 days. Not necessarily there yet. We still got to end out the first month of 2024. And it's Friday. It's Friday. We are back. Another market open. It is Friday, ending out what has been a pretty exciting week for a variety of reasons. Throughout this entire week. Obviously, went to California, came back here, got to have some fun, did an interview with Meet Kevin, super exciting, and now we're back on the show for the market open. Yesterday we did the market open, and it felt like we came back home, like we were supposed to be doing the market, because I missed it for 2 days, and so it sucked missing it for 2 days. Got a bunch of comments yesterday from people saying, "Amit, don't you dare leave us again." And so I think we're finding a little bit of product market fit for the market open. And I'm just happy to be doing it again. I'm super excited. You know, I saw this thing on Instagram today. There was this dude on Instagram he's a live streamer on Twitch. He's a gaming live streamer, and he has he live streams over 50,000 people a night, right? And I think he started like a year ago or a year and a half ago. And one of his analytics from his Twitch account got released that for 29 days he streamed to one person. Like his average viewer was 1, and the number of streams he did that month was 29. And it was just so, it was just so humbling to see that, like someone who now streams to 50,000 people a day, literally when one person was showing up to his streams, he did not care. He was ready to continue, like just being there and putting in the work. So I think the biggest thing I got this week was just that you have to put in the work no matter what. And, obviously we have more than one people that show up to the stream, which makes me incredibly grateful, incredibly excited every single day. And it's incredibly humble to be here and keep doing it. And, having fun along the way and trying to grow. Eeyore was right. Trucker Rob, Top Dasher, Jeremy, David, Gift Magic, Felicia, Nicholas, Juan Ortiz, I Show Sad, Broccoli Bod. Can we see some green today? I think we're getting some green today, folks. We got a lot of green that we're looking at right now in the pre-markets on a Friday. Mr. Seymour Duck, Mr. Russo, Victor, Diogo, Invisible Voices, Johnny Mac, Broccoli Bog, Joseph, Chris Patel. What's up, Chris Patel? We got Adam in the chat. Okay. It's almost like Palantir Weekly circa July 2022 right now on the stream. I love it. Philip Rizzo, Noodler, Growth Stock Wiz, W, Cactus Jelly, Kevin, Marcus, TJ, The Wheel Deal, Colorblind Collector, Meta Mike. Thank you all for being here today. Okay. We've got a lot to talk about. Tesla is one of the only stocks that's red right now in the pre-market, and there's a lot of due diligence that has been done in the past hour in combination with some other people, particularly Chris, that's helped me understand what's going on with Tesla. So we're going to talk about that because there's a lot of stuff to break down. So I do want to spend like a good 12 minutes on what's happening with Tesla and try to break it down the best to my ability. Palantir, new interview came out from Karp. I reviewed that interview last night. Probably not going to play too much of it, but I just want to give a little bit of like a takeaway of what I got from the interview. He did say there's a certain market cap he expects to get to, so I want to talk about why he wants to get to that market cap. And then Apple officially started the pre-sales for this $3,500 device that they want to be the next iPhone. So we have to talk about that as well. And then we have a lot of stuff going on in the crypto space, Bitcoin space. Bitcoin almost dropped below 40,000 last night. It's recovering at 41,000, but a lot of stuff to talk about there and keep going as well. Now, before we start, I at 10 a.m. am going to officially post the Meet Kevin podcast. The Meet Kevin podcast, I told you guys, will be on a new channel. The channel is now in the chat, and it's also in the description. Please subscribe to this channel. This channel is called Macro Darts. It is based off the website macrodarts.com. I don't know if this is always going to be the name, but I needed a name, so I just picked this name for now. This is going to be where I post all my macroeconomic analysis. This is where when I'm reviewing Fed surveys, when I'm talking about CPI, when I'm breaking down lithium prices and how that impacts Tesla, all of the macro stuff I discuss will be on this channel, along with interviews as well. The main channel right now, the Amit channel you're watching, I think is for live podcasts, live market open, market closes, and then the actual videos are primarily pertaining to Palantir because that's what the channel is focused on, and I go live as well. And that's kind of the mix of the channel. You know how you have a TV network, you have some shows, some are successful, some are not. I think what's successful on this channel is market open, market close, and then daily Palantir. And that's it. And that's all this channel has to be. And I think this channel can be very successful and grow from that perspective. But if I want to talk about other things, unfortunately, the way the YouTube algorithm works is if you try to talk about a lot of things on one channel, they have too much content and they don't have enough algorithmic discovery to get all of that content to be optimized within the algorithm that the channel is optimized for. And so if I start talking about macro stuff on this channel, it's just very unlikely that those videos are going to do well. And that's really why Meet Kevin broke up his, diversity of content into 3 different channels, because he just realized you just can't stuff everything into one channel. So you can unsubscribe in 2 weeks if you're not happy with the channel. But if you are excited for the macro analysis, if every day you want, 5-10 minutes of me talking about what's going on in Japan, we got Japan inflation numbers today. We got a lot of different stuff. This is the channel where you would get it. And over time, I think the channel will expand as well. So the Meet Kevin interview, I think you guys are going to really like it. Let me give you guys a sneak peek right here. This is what the timestamps are looking like. It's a very in-depth interview. We got 42 minutes. You got that thumbnail right there. Thumbnail looking good. And it's a lot. And it's HD quality, 4K. I think you guys are going to enjoy it at 10 a.m. I really think it's going to be a fun one. Noodler, thank you for the $4.99 super chat. Means the world to me. Thank you for that super chat. And I think you guys are going to enjoy the podcast. And hopefully, we can save up some money and get a studio that's looking like Meet Kevin, not as you probably spend a couple $100,000 on it. Maybe we spend, 10, 15 grand and get a really nice looking studio, because it's just when you make something that's that high quality, and you guys are going to see it when you watch it in 4K today, you just want to produce even higher quality shit. Maybe Finance Junkies one day has a studio like that in New York or something. I don't know. We'll see what happens, but it's super, super exciting. And we'll keep going we'll keep going from there. Is Chris Patel's wife okay? Well, she's because Chris in the chat says she's good, just really sore. If people were watching Cash Flow Chronicles last night, he had to leave early because he had to take his wife to the ER. So thankfully she is doing good. I was texting him last night and she's all right. But she got rear-ended by a Tesla, dude, which is insane. That's the ironic thing, that she got rear-ended by a Tesla. And Chris was thinking of buying a Tesla yesterday because it's the safest car, but she got rear-ended by a freaking Tesla. And it was a little bit of a nasty crash for sure. And so thankfully she's doing all right, a little bit sore, and hopefully she recovers as well and everything goes good from there. Real bricks soon. Okay. All right. So we are here, and I'll periodically remind you guys about the new channel. It again will be launching in just a bit. 241 subscribers. Thank you so much for subscribing. And we'll have that Meet Kevin interview at 10 a.m. Eastern Standard Time. Okay, what's the first thing we want to discuss? I think let's do Apple. Let's do Apple really quickly, and then we'll get into Tesla. I got a lot of stuff to talk about when it comes to Tesla. Okay, so Apple. Apple has officially announced their Vision Pro, and unfortunately, it's not even $3,500. And I think all of us knew this, but we kind of forgot about this. If based on taxes, like Gene Munster, tech analyst, he analyzed it right now. We're looking at $3,800, folks. This is the cheapest version. $3,800. Now, maybe it depends on what state you live in, whatever, but you're definitely paying more than $3,499. I mean, you're paying some money when it comes to taxes and a bunch of different other things you have to deal with. So, I mean, look, $3,800. Gene Munster says it's worth noting Deepwater is open to investing in companies that are building on top of Vision OS. So we needed a head start to evaluate those opportunities. If not for the investment angle, I would not be buying this today. Very interesting. Now, what I tweeted last night, if you're following me on Twitter, right before I went to sleep, I saw a Bloomberg article. Here was what Bloomberg had to say. YouTube, Spotify, and Netflix, 3 consumer companies that have Spotify 600 million, Netflix, I think Netflix is at 240 million subscribers, and YouTube obviously at 2.3 billion users, are all deciding to not partner with Apple to support their apps on the first generation of Vision Pro. So basically, Apple went to these guys and were like, hey, we're coming out with a new device. It's going to sell like hotcakes. People are going to use it. You should want your YouTube, your Spotify, your Netflix app to be on our Vision Pro, and you should use the Vision OS. You should hire a bunch of developers, make the app so that the users get the beautiful user experience of using YouTube on the Vision Pro. And Google, Spotify, Netflix all had 5 fingers. They did this Apple. They took their 5 fingers, they put this one down, then they put this one down, then they put this one down, then they turned the finger around, and then they put this one down. And this is what they did to Apple. They oh shit, that wasn't even the middle finger. Fuck, someone's gonna clip it. Damn it, that was such a good setup. That was such a good little clip, and I didn't even get the fucking middle finger right. All right, well, this is what they did. Dude, that's going to be a clip, and it's going to be so embarrassing. I did the fucking ring finger over the middle finger. Regardless, that's what they did, okay? They put a middle finger up in front of them, and they said, you know what, Apple? We're not going to capitulate to your stupid Vision Pro. We're not going to make a native app just for the Vision Pro because you haven't really given us an incentive to actually do this. And quite frankly, if I'm YouTube, if I'm Spotify, if I'm Netflix, Here's my biggest reason for why I wouldn't partner with Apple. Damn, you guys are laughing in the chat. That was so embarrassing, dude. That was going to be such a nice little setup. And I thought of it on the spot. I didn't plan that. I planned the market open for like 2 hours. I didn't plan that one take. That some of this stuff is spontaneous. It comes on the spot. It was going to be so good. I was going to clip it, put it on Twitter. It was going to be, and now I can't do it. If I'm YouTube, Spotify, or Netflix, my argument is I haven't figured out how to monetize on Vision OS, right? So if I'm YouTube and I monetize through advertising, the ads on Vision Pro are not going to be the ads on an iPhone. The ads on Vision Pro are not going to be the ads on a desktop computer. You have to work with advertisers. Like, people are seeing this, 3D thing right in front of them. How is the ad going to work out? And if YouTube can't make any money on ads, why do they care on being on the Vision Pro? I think same thing with Netflix. I think same thing with Spotify. They haven't really figured out how are they going to, Spotify, for Spotify hates Apple because Apple takes 30% of the subscription fee, and most people want to sign up to Spotify or any consumer service through their iPhone. So literally, if you try to pay $10 a month for premium on Spotify, they say, hey, you can't buy it on the phone. Please go to your browser. And they literally have a note that says, we know it's inconvenient. We're sorry, but you have to upgrade through the browser. They probably miss out on, I would imagine, hundreds of thousands of user upgrades every single month just based on that inconvenience, but they're not willing to give Apple the 30% fee. So from that perspective, I think it's very fair that YouTube, Spotify, Netflix are like, why don't you give us an incentive to come? Why don't you not charge an arm and a leg, literally, to the consumer to be able to buy your device? And why don't you actually give us, a better reason than just, oh, you're going to be first to partner on your device? Because by the way, Apple, your device is a piece of crap if you don't have our products on it. Like, the developers and Apple have a very symbiotic yet antagonistic relationship. The Vision Pro is not exciting unless there are native products built on top of Vision OS. And the developers aren't excited if they don't have millions of users. Well, Apple hasn't really shown a good faith attempt to get millions of users for the Vision Pro because they're charging $3,500. And we all know it's a developer version that'll eventually get cheaper over time. But why would I want to be first to a developer version where there's no real actual users? Wedbush is estimating about 70 to 90,000 pre-orders, and then they're estimating about 400 to 450,000 for the year. Maybe they're conservative. Maybe it's going to be 300,000 pre-orders. Maybe Apple knocks it out of the park. My concern is about the longevity of that product actually being sustainable, because to upgrade to Vision Pro 2 and Vision Pro 3 and Vision Pro 4, there has to be, for that S-curve of Apple to happen, there has to be massive levels of innovation and growth, and there has to be a use case. And personally, I'm not sold on this product being the use case. I don't want to say it's going to be a failure, but I definitely want to say it's not something that I'm excited about. I'll use it maybe once or twice, and then I just won't use it again. So that's my take on the Vision Pro. It makes sense that YouTube, Spotify, Netflix aren't partnering. Other companies, Disney will definitely partner because Disney likes Apple. But does anyone really want to watch, The Mandalorian on this? Maybe there's some people that do, but I think a lot more people want to watch like Netflix shows on it, right? And if that's not happening right now, then it's, literally imagine going through your browser and typing in youtube.com and like playing the magic imaginary piano on your Vision Pro to type in on the keyboard youtube.com and then going to the browser. Like, that's such a horrible experience, dude. And I think Google knows that as well. And so that's what's happening right now on the Vision Pro. Shout out to Chris Clark because, we have such a faithful community that now we are getting memed already. I cannot believe I messed up that bit, dude. There are some things that are so spontaneous and you just get the idea and you're like, all right, boom, here we go. Middle finger. That's the bit. It's going to happen. It's going to land. People are going to enjoy it. It's going to be fun. And then you miss out on the fin. It's like you get the alley and you try to dunk it and you hit the rim. It doesn't land. It just doesn't land. All right, this is what it is. They could have at least made it wireless. I think that'll be the second version. I don't blame them for not making it wireless because I know it's really hard to innovate, and then the battery and all that stuff. Like that's super annoying. I get it, but I think 3,500 is highway robbery. I think they're charging an absurd margin because they think their brand is good enough. There's no way it costs them. Oh, it's costing us 3,400, so we're selling it for 3,500, so we can at least make some profit. It's like, get the hell out of here, Apple. Like, come on now, come on. You're just flexing your brand over everybody, and you're flexing your brand in an area where I don't know if it's worth flexing your brand yet. So that's what's going on. Amit's so nice, he doesn't know how to use the finger. So that's what's going on with Apple. Okay, so again, Macro Dart's new channel that is launching for those that are joining. Meet Kevin interview is launching at 10 a.m. The channel's in the description. New channel just for macro analysis and interviews, so that this channel doesn't flood your feed with that. If you're interested, please subscribe there. Okay. Let's talk about Tesla. We got to talk about Tesla. We have a bunch of other headlines, but let's do Tesla, and then we'll move on to Spirit Airlines, which is up 30%. So if you bought the dip at 60%, you're up 30%. We'll talk about that. But let's talk about Tesla. Okay, so there's a lot of interesting stuff happening with Tesla, and we need to talk about a variety of different little things that are going on. So first of all, I have a bunch of just small articles I want to share. Not going to read through the articles, but just show the headlines and then do some analysis. Lithium prices are down 80% year over year. Okay. 10 a.m. Eastern Standard Time, Dominic. So 7 a.m. Pacific and 9 a.m. Central. Lithium ion prices are down 80% year over year. Okay. Now, one may be arguing, wait a second, if those prices are down, then that means that, well, that's great for Tesla because that means their input costs in regards to building the batteries, the lithium iron batteries, which is needed to build the Teslas, are going to significantly decrease. That is correct. However, like all things in life, you have yin and yang, you have balance, right? And all things in life require some balance, and there's a unique balance between supply and demand. When lithium prices go down 80% year over year, there might be a little bit of a demand problem versus just a supply chain bottleneck problem that now opened up the floodgates for lithium prices to start deflating. Here's another thing. Ford this morning is cutting production of their F-150 Lightning EV. They're adding jobs to the Bronco and Ranger plant. They announced to cut Lightning production comes out a month after CNBC and other media outlets reported Ford would slash planned production of the pickup. The automaker will be reducing production of the Lightning at its Rogue Electric Vehicle Center in Michigan to one production shift from two, impacting approximately 1,400 employees. Now, the headline, you may think, well, wait a second. This is just a problem with Ford. Ford sucks. Tesla's great. People don't want to buy the Ford F-150 Lightning, and that's why it's a Ford issue. That is one argument I am sympathetic to. But another argument could be that maybe there's some EV demand stuff going on. And again, I'm not being conclusive either way. I'm just trying to bring some perspectives here, especially because Tesla stock is down again in the pre-market below $210. And the reason it's down is a little, confusing. And so I'm trying to put the pieces together and make sense of this. So we have lithium prices up 80% year over year, signaling that maybe demand is falling, which is why those lithium prices are down 80% year over year, because obviously prices will go down to increase demand, right? And if they're down 80% year over year, maybe that's happening. And then you got this Ford cutting production of F-150 Lightning EVs, which is very interesting. On top of that, now you got Tesla. This was posted yesterday at 1 a.m. Is cutting prices now in Europe outside of just China. So the China price cuts is what took Tesla from basically 230-ish to 220 over the past week. I mean, that was really bad news. The Germany Berlin production being delayed by a month, that was also not the best news. That was out of Tesla's control. That's the Red Seas, the Houthis, but still not the best. Now, yesterday, the EV giant has cut prices in Germany by more than $5,000 after cutting prices in China. This is reported by the Wall Street Journal. Tesla sales rose 2.2% in Germany last year, but fell 77% in December, according to the Federal Motor Transport Authority. So last year, they rose 2% year-over-year sales, but in Germany fell 77% in particular. And when in a month, you lose 77% of sales. I mean, sequentially, when it's down from November, 77%, I mean, that's a pretty big issue. That's like something happened in December for those prices to come down that dramatically, or for the demand to come down that dramatically. And that may be because of demand. So you've got a variety of things going on right now that's impacting demand. And I think that's ultimately the bottom line that's hurting Tesla, right? So if we just pull up Webull and we take a look at just Tesla stock price real quick. And then I have a couple more things I want to say about Tesla. Tesla right now is at 209 and the pre-market is down about 1%. What's really surprising about this, guys, is that the QQQ, the NASDAQ 100, remember that ETF that was up 54% last year, is now at all-time highs. To start the year, I think it's up 450. It ended the year at 403 or 410. It's up like 5 or 6 points, but the fact that it's up, like, let's call it 3 or 4%, is really interesting because it's like, what's going on here? How is the QQQ? Why is money continuing to be pummeled in to the NASDAQ 100, some of the biggest tech stocks in the world? But if you look at the Max 7, Google, Meta, Microsoft, Apple, left-hand side of my screen, Amazon, Nvda. By the way, we got to talk about Nvda, $580 in the pre-market. Again, insanity. The only one that's red, the ugly little duckling, is Tesla. And part of the reason may be because the market is starting to price in, wait a second, lithium prices are down 80% year over year. Ford is cutting their F-150 Lightning production, meaning they're not seeing that demand. Tesla's cutting prices in Europe and China. The China ones are tough because that's 25% of their sales. So that's a tough one to swallow. But now it's happening in Europe. What's really going on here? Like, why exactly is this happening? And then you got Elon, memeing sexual positions yesterday on Twitter. That doesn't really help. I mean, like, I don't care about that as a shareholder, but in general, it's some shareholders might not be happy with that. And so you put all that together and you've got some issues going on in Tesla. Now, that's the bearish case. The bullish case is that this might be the opportunity for them to actually start focusing on a variety of other parts in their business. So, for example, in December 2022, Tesla acquired a piece of Shanghai land for their Megapack battery plant. The energy business was up 40% year over year, whereas the automotive business last quarter was up only 9% year over year. And so one could argue that with lower lithium prices, this could actually end up being a huge profit driver for Tesla. Let me say that again. Lithium prices are down 50% year over year. You need lithium to make batteries. Tesla, you're looking at this article right now from just about a month ago, acquired a massive amount of Shanghai land for a Megapack battery plant. The battery business, the energy business, is growing 40% year over year, whereas the automotive business is only growing 9% year over year. Construction of the project, which will be capable of producing 10,000 megapacks per year, is scheduled to begin the first quarter of 2024, with production starting in the fourth quarter, Reuters reported in December. Maybe this is actually what the Q1 or Q4 earnings call is going to guide in terms of growth for the year. Everyone is so focused on the automotive business. Everyone is so focused on Cybertrucks. Everyone is so focused on gross automotive margins. Well, price cuts are happening, and that's not fun. And that's definitely not great for margins. That sucks for margins. And that's definitely not great for top-line revenue growth. Last quarter, Tesla only grew 9% year over year based on that quarter. The energy business is at 40% year over year. If you have lower lithium prices, maybe you can use those deflation in prices to be able to pummel them into the business that's actually growing more than the automotive business, which is energy, and really focus on that one. So if we see that happen from Tesla, along with the automotive narrative being a black cloud over Tesla, leading to the price to get down to that 170 to 180 range, that may be the real opportunity when it comes to a dip. I know the dip is exciting right now at under 210. And look, I bought at 215, so that's fine. But below 200 in that 170, 180 level, if we get guidance going into Q1 about what they're thinking of energy, especially with lithium prices falling this much, that could be very exciting for Tesla. Now, granted, take this with a grain of salt, because when interest rates get cut, I believe, like I think many people believe, Tesla's going to skyrocket. Like, I think we all understand that that's going to be happening. And likely, I mean, hopefully, right? It's not guaranteed, but that's likely something the market's going to be pricing in for Tesla once those rate cuts happen, or once the signal of the rate cuts are finally starting to, we can see the horizon that it's happening. But nonetheless, the automotive business, unless we see some really serious growth in the next couple of quarters, the energy business is where the real growth is happening right now. And Cybertruck, again, is going to take 18 months to get to free cash flow positive. So that might not be just pure top line growth for Tesla right now as well. Tesla's mass hiring for Dojo. Yeah, that also makes a lot of sense. Obviously, they're trying to expand the business from that perspective. But I think the drop in lithium prices is actually very bullish for Tesla. The problem is it's kind of bearish for EV demand, at least in the short term. Probably not in the long term, but at least right now, that's some of the stuff we're seeing. One other quick clip I just wanted to play is that we are having some new EV subsidies as well. Actually, we won't play this clip. We'll move on, but I'll just read the headline and we'll probably play it after the bell. The White House has announced new EV charger tax credits to $149 million to fix existing charging stations, which is also really great for Tesla. Because now, Tesla, EV charging, supercharging networks, you got the White House subsidizing the construction of a lot of this stuff. $7.5 billion was passed in 2022 to be able to help more EV charging stations be created. All of this is bullish for Tesla. The question just becomes, is demand, fully set in stone, and is there not an issue there? And I think Q4 earnings, which is going to be in 10 days or 5 days, is January 24th, right? Or it might be January 29th. I think it's January 24th, Wednesday. We'll be streaming live on the channel. We're going to get a lot more clarity on what's going on there as well. So we will see how it happens. Eric says S-curve start very flat. Tesla's energy biz S-curve is just now starting to steepen. I agree. I 1000% agree. And the lithium prices going down is also a good reason for, why, or a good catalyst to at least start supercharging their ability to start expanding a lot more. Tesla short term is scary. Where will Tesla be in 2035 when gas vehicles are banned? I agree. 2035, Tesla's not going to be as scary as it is right now. But, it's about entry prices. And look, I mean, I would love to buy a 210, but if I can get in at 170, that would be better, And does it get to 170? I don't know. I really have no clue. The only thing that's leading me to believe that it could get that low is because, again, guys, everything is up when it comes to big tech. Like the only stocks that are down in the stock market are some small caps and Bitcoin miners. Everything else is green. Like, show me what's actually red. Most, like, even the airlines are green, for goodness sakes. Like, everything, Roku's green, Square is green, Netflix is green, Roblox is green, the Cathy stocks are green. We got NASDAQ at 15,000 right now. Remember, 16,000 was the top when it came to the NASDAQ. The S&P is already above all-time highs. It's like $2 below that right now at 470. In the pre-market, it's at all-time highs, 478. It's in the pre-market, is up 0.4%. So everything is green outside of Bitcoin, crypto stocks, some fintech, SoFi and Robinhood, even though Robinhood's done decently well over the past 3 months. SoFi has been just a juggernaut, being stuck in that $7 range. Besides that, the only thing that's red is Tesla. And so the idea that it could go lower, yeah, it could. It very well could. The question just becomes, how bad do those earnings have to be to get it to go lower? And if you ask me right now, gun to my head, does it get to 170? I would say no. But if it does, then I think there's definitely a big opportunity there. Are we too euphoric? That's a great question, Christian. This is something I've been asking myself a lot every day because what's triggering that? This idea of euphoria. What's triggering that is seeing Nvda go up at this point. Let's do the math, folks. We do the math here on the market open. 580 minus 493 divided by 493, 18% in 9 days. At this point, 10 days. I don't know, man. 18% in 10 days on Nvidia is a lot, dude. It's really a lot of money. It's a lot of movement. It's a lot of upside. And it also feels euphoric. Same thing with, Nick says Microsoft is crushing it. I got in about a month ago and I'm up already 8%. I'm very happy, Nick, that you're up 8% on Microsoft. The problem is if you got in a month ago, you probably shouldn't be up 8% because why is it up another 8% after being up 70% last year in 1 month, right? So I'm happy you're up, but I'm also just confused. Why is the market piling into big tech? And I mean, this is something I think I want to explore over the next couple of days, like trying to really get a broader understanding of this. You could say it's a flight to safety, sure. But what we were told, or like some of the mainstream narratives going into 2023, was that small caps were exciting, right? Where it was that the more unprofitable companies that had not performed were exciting. Small caps are down. Look at the Russell; it's at 190. I mean, it was at 160 November 2023. So November 2023, it was at 160, catapulted to 205. So nice bump. Definitely a nice little price action. But it was supposed to be outperforming big tech this year, and it's definitely not. Meta's at all-time highs. And Nvidia's at all-time highs. Amazon is $30 from all-time highs. Google is $20 from all-time highs. Microsoft is higher than Apple in terms of market cap. And then Apple fell, but then yesterday got upgraded by Bank of America to 225, and now Apple's doing just fine. So maybe there is a little bit too much euphoria, but the argument against that from a macro perspective is that if inflation starts falling off a cliff, which is very likely can fall off a cliff, then the euphoria is definitely justified because the rates are going to get cut. So, and also, when you think about investing, what other companies are there besides the Max 7 that are super, interesting companies to invest in? You got like Palantir that's there. You got some of the fintech, but fintech's not really getting a good rap this year, even though PayPal's actually doing well. We'll talk about them in the pre-markets. And so Big Seven's the companies that are left. On top of that, AI narrative has not gone away, which is why this earnings seasons is going to be the most exciting earnings seasons, in my opinion. Because if Meta, Microsoft, Amazon, etc., these guys don't perform, yeah, it's not going to be fun. I mean, if these guys do not perform, it is not going to be fun. And I think they're going to perform, but if they don't perform, it's just going to be a tough earnings cycle because the market's not going to be able to justify this premium. There's just no way they're going to be able to do it. Okay, real quick, I just want to talk about Palantir, and then we'll go on to some more macro stuff. We'll spend like 2 minutes on it. Alex Karp yesterday said that he sees Palantir being able to get to a $60 billion market cap, which is basically a doubling of the stock price. He said this in an interview with Axios. And the reason he said it is because he basically was like, well, at the end of the day, AI is taking over. If AI is taking over and we are one of the only enterprise software companies that can actually implement AI in a meaningful way, then there is no reason for why Palantir to not be able to get to the market cap. And he was comparing it to some of the other largest companies in the world. And he just kind of threw out a number. Like I could see us getting to like 55, 60 billion, stocks right now, 35, 40 billion. So you're imagining a double. His lawyers wanted to like shoot him when he said that. His lawyers also wanted to shoot themselves when he said that. But nonetheless, he did indeed say it. And so it was really nice to see Karp, kind of put a number because a lot of these guys are so hesitant to say this type of stuff. and good for good reason. They're not supposed to talk about it. Then you got Elon tweeting the type of stuff he tweets. But regardless, it was nice to see him kind of put out that market cap. Now, here's another thing that came out just on Palantir. This is a Forbes exclusive. For those that may not have heard the news, Karp is coming out with a book. It's called The Technological Republic. And quite frankly, as a Palantir content creator, I just don't know how 2024 could have started off better. I mean, we have like 17 new interviews between Sham and Karp. So that there's a lot of content to break down. And then you have the CEO of your company releasing a freaking book. I mean, like I have not read a paperback book in a while. I listen to a lot of podcasts, a lot of audio. This is going to be one of the ones I buy in a while. And I'm going to read front to end and just going to be able to analyze deeply. So this is also going to be really exciting. And the only reason I share this is because what does it mean for business and shareholders and investors? I think the company is very excited. They're doing a lot of PR. Yes, you saw Sham Sanker do an interview with Tom Nash recently, right? The first time they reached out to a retail investor. He did an interview with Harry Stebbings of the 20 VC podcast. You got Karp doing a bunch of these different podcasts. He's at the Davos Summit. He's talking. He's being ferocious when he's talking. He's like really shitting on a lot of public CEOs. He's talking with a level of arrogance to me that is establishing that I think he believes. He also said yesterday, our US business is growing so fast, we're thinking of rebuilding the entire company. I mean, when you got someone saying these types of things, are you whispering sweet nothings into my ear, or are you going to show me the growth? Are you a grower or a shower? Like, what's going on here? And I think Karp, their guidance is going to show in Q4 that they are a grower. And as long as that guidance is above 25%, I think the market will reward them. If that guidance is sub 20%, we're heading to $14. And so I think hopefully we will get guidance that is above 25% as well. Amit is going to read the book live on air. Dude, that's not the worst idea in the world. It's not the worst idea. Let's start a book club. Actually, though, let's start a book club, dude. It's not the worst idea. It's really not. It's a pretty good idea. It's a pretty good idea. Do you have any thoughts on DWAC? This is the Trump SPAC, right? Where is it at right now? This thing was like a $60 at one point. It's at 25. Is it up? It's up 10% in the... Let me look at it in Robinhood real quick. DWAC, I remember this in 2021. Didn't it get to 100 at one point or something? Year to date, it's up 45%. Oh, so that's why you're asking me about this. So yes, January 13th or January 16th, it went up. I mean, maybe it's going up because Trump won Iowa. It's up 50% in the past week, dude. Holy crap. Yeah, I wouldn't touch this thing, dude. It's very scary. I mean, this is one of those things where it's just pure gambling speculation, and there's no thesis even behind it outside of maybe Trump winning Iowa got people excited because the DWAC is for his NFTs, right? Like that's the business model, or no, the DWAC is for Truth Social. So if he wins the presidency, he can probably get, I would say, 10, 15 million more users on Truth Social. Truth Social is monetizing, to my understanding. I don't use the product, so I don't really, intimately have too much of an understanding of it. I mean, look, I wouldn't touch it, but there is a thesis that if Trump wins the presidency and DWAC becomes like a legitimate product, or Truth Social does, maybe more users, and then maybe more growth, and then maybe more people buy the stock. Maybe it actually de-SPACs and it goes. I mean, I don't know. I wouldn't touch it though. It's very scary, but it's up 50% in a week. I think because he won Iowa. Erwin says, read the book. I might have to read the book live, dude. We might have to do a series of reading chapter by chapter. Because I would basically be the audiobook then, right? Like I would be the audiobook. So, and I don't think Karp really cares about how many books he sells. Like, I think he has enough cash to not worry if someone's reading his book live and giving away his book for free. I think this is about marketing for Palantir. Like the way I thought about this book is, when you're a CEO that is so rooted in academic intellectualism and you're making these profound arguments around Western values, democracy, protecting these axiomatic truths, it is about branding for you more than, likes and impressions. And so releasing a book is very Karp-esque. Like I think Karp would rather have a book than a Twitter account with 500,000 followers. I genuinely think that. I think Karp would rather sell 100,000 copies of a book and be like on the New York Times bestseller for maybe like a couple days, then have a Twitter account with 500,000 followers, which I believe is like infinitely more value than 100,000 people reading your book. Like I think that level of distribution on Twitter is just more valuable. You could sell more stuff. You could do more things with it. But I think Karp is the opposite. I think Karp would definitely be the opposite. Palantir guest for each chapter, dude. All right, I'm gonna write this down. This is becoming a series. No, Erwin, this is a good idea. We're gonna get you on here. Just invite different people and read it live. This is actually great. This is great. This is super, super cool. When is the book released? I don't know. They said like early 2024, so probably in a month or two. Are you allowed to do that? You would be giving away the book on YouTube. That's my point, dude. Like, I don't think Palantir cares. I really don't think they give a crap. I think they would want me to do this, quite frankly. They would want me to like get exposure for the book. And look, if you're going to read the book, you're going to read the book. You're going to buy, like me reading the book on YouTube is not going to stop people from buying the book. But it's definitely going to get people more excited for Palantir, which is the whole point of the book, right? So I think that's why they care more about it. Okay, so we talked about Palantir. We talked about Tesla. Let's pull up some other stuff we got. Thank you guys for being here. Let me do a quick shout out real quick. I am launching a new channel this morning at 10 a.m. The channel's in the chat right now. Subscribe to it, please. I have an entire 40-minute Meet Kevin interview coming out. We talk a lot about stocks. It's my first 4K, really high-quality interview that I've ever done in my life. I think you guys will enjoy it. You know, it's actually funny because I have to show you guys one day on like a late night stock talks, a interview I started doing in 2019, a podcast I started. It was called Motivated by Mortality. Yes, that was actually the name of it. And the quality of that podcast when I actually tried to record it and the microphone and all that stuff compared to the interview I just did with Meet Kevin 5 years later, it's just kind of crazy how things have changed just in terms of like content creation. But I think this interview will be really fun. I think you guys will enjoy it. And the whole channel is based on macro analysis. So all the macro stuff I talked about on the Market Open, imagine those in video forms on this new channel without having to flood the current channel you're subscribed to, this channel, in your feed. So if you care about macro stuff, I know not a lot of you, like only care about macro stuff, but if you do care about some of that stuff, definitely check out that channel. In 2 weeks, if you don't like it, unsubscribe. But if you want to give it a chance, then please give it a chance. And that interview will be live at 10 a.m. Let's talk about PayPal. PayPal is really important. Let's discuss PayPal because PayPal is actually doing very well right now in the pre-markets. $63.32. Why is PayPal up right now? When a lot of other fintechs are down. I mean, Robinhood has been kind of shitty the past 3 weeks. SoFi just took an absolute beating the past 2 weeks. PayPal is doing well. I think the market is very excited for what Alex Chriss is starting to talk about, which is this idea of reinventing the entire company based on some level of innovation. Roy Dominic says, what's the channel? It's in the chat right now. You can check it out. Macro Darts. The channel is right there. You should be able to click on it and easily subscribe to that. So what did Alex Chriss say? If we look at, we looked at his interview yesterday, but on Twitter, I just want to show you guys his tweet as well. Alex Chriss basically is saying that on January 25th, we're going to have this brand new innovation day. And he says we're going to shock the world. And to me, that's a very peculiar statement. Like, what do you mean we're going to shock the world? You're a payments company. A payments company is not that interesting. What is a payment company, going to do to shock the world? And he says PayPal revolutionized commerce and we're going to do it again. Tune in to the PayPal YouTube channel, January 25th, 9:30 a.m. Pacific Standard Time. I will be live streaming it here for an exclusive preview of the first innovations PayPal and Venmo are piloting and bringing to the market this year. This is why the stock is up right now. Nothing fundamental has changed. The market is willing to give up right now about 5.6% in the past 2 days, which is a big move for PayPal. I know Nvda is up 18%, because of imaginary, whatever numbers analysts are coming up with. But PayPal up 5% actually is very exciting for PayPal shareholders. I think the market's giving a premium, a preliminary premium to the idea that Chris and his team have something up their sleeves in regards to data and having a unique data advantage that no one else is talking about. Either Blake is right in the chat and it sounds like a hype train, or legitimately they're doing something in payments. And I just want to, I wanted everyone to put in the chat because I gave my argument yesterday. I'll reiterate it and then we'll move on. But what innovation do you think they're doing? The only idea I have is they're going to be leveraging AI to make merchants have better conversion rates. And they're going to have some type of product or feature that is like implementable on your website to increase conversion. And they're going to have more personalized AI experience for consumers. That's like a very basic innovation that I think they're going to be able to do. What if they introduce an entire like Shopify for payments or something? Like I'm like spitting stuff out of my head right now, but like, what if it's like some really crazy innovative stuff, like some stuff that we just didn't have an expectation of? I don't know. He said it will include AI. That's correct. And he has to market AI because he needs to get, if PayPal turns into an AI play, dude, the stock's going to do pretty well, in my opinion, just because I think AI is going to do well this year. But he has to justify that to the market. And the only way you justify that is if the AI actually increases the transaction margins, the gross merchandising volume, or the overall top line level growth. Remember, PayPal is expected to do $29.15 billion and $4.46 billion of free cash flow, $29 billion of revenue for the next 10 years. If you do a DCF analysis, that's what it ends up working out to for like a stock price of $55. Right now it's at 65. So call it, 1 or 2% growth, if that, over the next 10 years. If they even grow 8 to 9%, which is not unreasonable, growing 8 to 9% for a company like PayPal, you've got a stock that should be able to get at least closer to their all-time highs at $100 than at $60. All-time highs were at $330. And so we'll see what happens. But I think that is the case. Chris says, I wish Amazon accepted PayPal. Does Amazon not accept PayPal? Really? Amazon doesn't accept. Let's ask Bard. Let's ask Bard right now. Let's see. Let's make Bard useful. Does Amazon accept PayPal? Let's see. This is more useful than Google searching that, because I doubt I would get a good Google result. Oh wow, they don't. Here we go. Look at Bard. Look at Google. Google's given. Look at those good results. Amazon does not directly accept PayPal as a payment method. This means you can't choose PayPal during checkout. Huh? Why doesn't Amazon accept PayPal? Like, why? Like, what is the reason for that? PayPal is what? Why does Amazon not want to pay PayPal some fees on this? Because I would imagine PayPal would dramatically reduce those fees just to be able to be on Amazon. I mean, dude, if PayPal was on Amazon. Let me ask Bart another question. How many items does Amazon sell a day? Let's see. Because that's a lot of shit that Amazon sells. How are they not partnered with PayPal? 1.6 million packages daily, 20 orders per second. I mean, first of all, this shows you why Bard is actually useful. I mean, there's real-time data. ChatGPT would have to be like searching with Bing, and then this stupid fucking like circle that's loading forever. Like, so that is where Bard is actually useful than ChatGPT. But that's a lot of stuff, and that's very confusing for why I did not know that PayPal didn't work with them. Margins. Well, that's another good point. Amazon barely makes retail margins if they have to pay up a little bit to PayPal. Yeah, that's actually a good point, Crossroads. That's actually a good point. By the way, guys, if you are not following Crossroads, I know I told you guys to please subscribe to my channel, but let me just put Crossroads' Twitter in the chat. This is the best Twitter account you can go to pay for PayPal information. Put it in the chat right now on the screen. This is quite literally, I think he understands PayPal a little bit better than Alex Chris, dare I say. Because Alex Chris just got in. Crossroads has been analyzing it for the past year. So, and also, he kind of looks like Alex Chris. This is Crossroads. You can't tell me that doesn't look like Alex Chris. I mean, it kind of looks like Alex Chris. I mean, so let me show you Alex Chris. So we have this theory. Me and Crossroads have this theory that, dude, are you Alex Chris like in disguise, and you're just kind of you're on YouTube, kind of monitoring everything that's going on. But definitely shout out to Crossroads. That is a good point, Crossroads, because if Amazon doesn't have the margin to be able to give to PayPal, then there's no way that they're going to be able to do a partnership with them. So makes sense. I may or may not be Alex Chris. That's insane, dude. All right, we got 2 minutes till the market open, folks. 755 people. Thank you for being here. Again, the Meet Kevin interview is launching on Macro Darts in just 30 minutes. We got 317 subscribers. Thank you from the bottom of my heart for subscribing. Again, link is in the channel. You can unsubscribe in 2 weeks if you are unhappy with the content. But if you enjoy some of my macro analysis on this channel in the market open, that channel will be dedicated to that stuff. And we're launching it with a bang with the Meet Kevin interview. It's the most high quality interview I have ever done in my life. I really think you guys will like the questions. I really think you guys will like the pushback. Meet Kevin tried to say that Twitter is a dead platform. And I was like, really? You have 313,000 followers. You think it's a dead platform? He's like, yeah, I think it's dead. I was like, really? You're posting all your YouTube videos on Twitter. You still think it's a dead platform? He's like, yeah. So it was a fun back and forth. It was a good exchange. And we talked about a lot of shit. He had dinner with Kathy Wood. I didn't know he had dinner with Kathy Wood, but he talked about how Kathy Wood was in dinner. Kathy said something to him that literally made his jaw drop at dinner. And I'm not going to tell you that because you got to watch the podcast, obviously, to find out what she told him. Like, obviously. But what she said that made his jaw drop. I mean, I started bursting out laughing during the podcast. And I wasn't just laughing to, be funny and laugh at his jokes. Like, I genuinely was like, I cannot believe she said that to you during dinner. So there's some juicy stuff in this podcast. I think you guys will enjoy it. And it'll be fun. All right, we got 30 seconds until this market opens. We are very green right now. Tesla's the only one that's red. QQQ at all-time highs. PayPal up 1.5% in the pre-markets. Robinhood trying to get back to that $11 range. Nvda, $580. Will be exciting to see what happens to Nvda. And let's get into it. And once again, do what we got to do on this channel on a Friday, which is open the markets, because that's what we do. We open the markets. Ladies and gentlemen, January 19th, 9:30 a.m., the stock market is now open. Wake your ass up. Nvidia opens up at $580, up 1.53%, $579.99. Amazing stuff by Nvidia. I mean, let's see, dude. Is the market just going to take it to 600, or are we going to chill out a little bit? I don't know. Let's see. But the market is the market is giving a premium. QQQ all-time highs 415. Absolutely phenomenal. Price action by NASDAQ 100. PayPal up $62.63. Okay, so it sold off a little bit as soon as we opened. Not up 2% anymore, up 0.7%, but not bad. Nvidia 578, S&P 477, slight sell-off, but up 0.28%. Robinhood, bigger sell-off, down 0.47%, 1062. Bitcoin, 41,072. Bitcoin struggling to stay above 41,000. I mean, it's $65 from going below 41,000. We'll go back to Bitcoin. Celsius, wow, Celsius is down 5% to open up the day. Huh. Interesting. Have no idea why. If you saw me and Steve's breakdown of Celsius, we both came away just not bullish at all. And maybe we're fundamentally misunderstanding the company, but we just weren't bullish. And so we're not buying Celsius. Probably have to do some more due diligence. But Celsius right now down about 5%. ARK Innovation up 0.13%. ARK B, Bitcoin ETF up 0.71%. IBIT BlackRock's up 0.69%. Palantir 1647. Palantir got to, I think, 70 yesterday, then it fell all the way to 1612. I bought some shares at that range. Now it's 1643. Truist had a good earnings. I didn't get time last night to really go through the earnings report, but again, they lost $5 billion on GAAP net losses. That's because of a goodwill impairment charge. Deposits did decrease slightly. Overall, I'm not sure why the market didn't really sell off the stock too much, but I guess in their earnings, here's the reason. I forgot. Their net interest income margins actually went higher by 2.98%, or sorry, but it went up to 2.98%. I think it was up 30 basis points. So that is what I think gave the market a lot of excitement, and that's why Truist didn't completely sell off. Now we just have to wait for interest rates to fall, because then it'll be good for Truist. But so far their earnings, didn't crap the bed, and not too bad. CleanSpark down about 1.7%. Let's go to the crypto stocks and see the bloodbath we're dealing with in crypto. Crypto's having a bloodbath. Crypto, you've got Cypher down 2.9%. MicroStrategies at $478. Again, the stock was at $730, sorry, on what was it? It was on January 2nd. Marathon is down. Hut 8 Mining down another 4%. I don't know if you guys saw the short report yesterday, but the short report came out from J Capital. I'm forgetting the exact name of the short seller activist group, but they said that Hut 8 Mining is investors are stealing from the company. They are hiding their taxes and all this type of stuff. And the stock dropped 25% yesterday, down another 4% today. That is a Bitcoin miner that just got absolutely demolished. Ethereum is up a little bit. Bitcoin now below 41,000. CleanSpark, another one that got demolished, down almost 45% in the past 2 weeks. Not nice. Maybe we're hitting a bottom, but it's at 680 right now. And then Coinbase at 124. The biggest problem with Coinbase that I've seen, or the biggest thing I was thinking about yesterday, and by the way, I talked to someone last night. I was texting them for a good 30 minutes last night. This is someone who has 80% of their net worth in Bitcoin. And I was asking them about my concerns around Coinbase and if they think they're valid. And this is someone who actually had the opportunity to invest in Coinbase pre-IPO. So it's someone who's been in the crypto space for a long time, and he 1000% agreed that Coinbase is going to have some issues because of the Bitcoin ETF. And the core argument is that the Bitcoin ETF is going to reduce trading volumes of the Bitcoin asset. If we do have a mega bull run, let's say 30 million people around the world discover cryptocurrencies like they did in 2021, and Coinbase is the number one app they download. I remember I was in the library of my sophomore year of college at Rutgers University downloading Coinbase and putting in $15 to buy some Bitcoin. Like that, like the FOMO gets to everybody, right? Everyone just wants to know what it is. His argument is all those people are just going to buy the ETF, or 99% of them are going to buy the ETF, because why would they go through setting up a cold wallet and all this shit to buy Bitcoin? So, I mean, that could reduce trading volumes. The counter argument is that, well, the institutional custodian product is going to increase, revenue and margins for Coinbase, which is fine, but I don't know if it's going to replicate the trading volumes of Coinbase, which is why if you shorted it at 180, I mean, it was a hell of a short. Now it's at 123. Stock's up about 3x since last year, but still a pretty dramatic fall if you bought in the 130 to 180 range so far. So crypto stocks definitely not doing the best right now. Magnificent Seven, all of them are up. Nvidia 576, Amazon 153, Google 146. Google finally breaking from 145. It's been stuck in that 140 to 142 level for so long. So we're getting a little bit of a breakout here on 146 on Google. Meta at 378. Meta is $20 billion away from a $1 trillion market cap. So obviously very, very exciting for Meta. And, now it's just a question if Meta can actually get there. But I think their earnings are going to crush, quite frankly. And I think Meta is going to do well. I'm not buying before earnings because at this point, I'm not buying it at $1 trillion market cap. But I think they're going to crush. And I think earnings are going to be great. Microsoft, 2.93 trillion. Apple, 2.92 trillion. Microsoft has now overtaken Apple as the most valuable company in the world. Microsoft trying to close in at 400. Apple trying to get back to that $200 range. And we're seeing a lot of momentum in these stocks continuing to do well. Alibaba, 67.41, Chinese stock that got hammered. I saw a crazy stat about Alibaba today, dude. I mean, just an absolute insane stat. I mean, if it was not for China, there would be no way in hell this company would be trading at these levels. Yeah, here's the stat. They've got 80 billion in cash. They've got 252 billion in total assets. Their profit margin is 14.5%. which is up 14x from their 2022 profit margin of 1.6%. They 14x the profit margin. They have 252 billion in cash, 80 billion in cash, 252 billion in total assets. The market cap is 162 billion. They have half the market cap in cash, and they have double the market cap, or 3/4 of the market cap in total assets underneath the company. I mean, it's just insane. But it's in China. It's in China, and if it's in China, it's hard to reconcile the fact. And so that's why it's getting this valuation. SMCI, Broccoli, thank you for mentioning that in the chat. Let's talk about this one. My goodness, SMCI. SMCI is up 16% today, okay? And the reason I'm not surprised it's up 16% is because they released preliminary Q3 earnings or Q4 earnings. So this is where companies are like, hey, before we release earnings, we're going to release something that guides for what our earnings are going to be. Like Snapchat did this in 2022, and that's when they guided that they were losing 30% year-over-year growth in advertising, and the stock really tanked that day. But so companies do this on the bull side and the bear side. SMCI did this on the bull side. They guided for I don't know, the revenues are up 30% year-over-year. I'm going to try to pull up the exact numbers, but the growth that they're projecting is kind of like Nvidia numbers. It's not as crazy as Nvidia numbers, but it's close to Nvidia type of shit. For those that don't know what SMCI is, to my understanding, they do graphic designs for the chips that are in all these consumer applications or electronic devices. And so they're a semiconductor play. And I might be getting that wrong. They're not just graphic design, but they do a lot of different stuff with chips. Okay, they're a big player in the chip space. If you guys watched Finance Junkies a long time ago, Chris is the one who actually pointed this stock out, ironically. This stock is only a $20 billion market cap. And Chris found it when it was a $5 billion market cap, and it had a PE of like 4 or something, some ridiculous number. It went from $70. We found that in January of 2023. Now it's at $360. And last year, I think it got to $380 as well, or $330 or something. It got to pretty high numbers, right? So SMCI, just absolutely phenomenal. If anyone's in this stock, I mean, congrats to you. It's done very, very well. 52-week high was 365, and it's getting close to that level. So, I mean, if you just look at the stock over the past, look at this stock, man. Let's just look at it over 5 years. I mean, there it is. So yeah, it's at all-time high. So it got to 355 in 2023, August. Now it's at 365. So you can see right here, it was at $34 in 2022. Then to start 2023, it was at that $70, $80 range right here. And then it just catapulted to 357. Now it's at 365. So this also signals TSM. TSM at earnings. And TSM is at 113. It's up another 0.33 or 0.333% today. I think another reason Nvidia mooned yesterday is because TSM was like, hey, demand's great. Revenue's up 8% year-over-year. We're not, we're doing fine. And so investors were like, well, if TSM is doing fine, then Nvidia is doing fine. Guess what else is going to do fine? AMD, 52-week highs, is also going to do fine. And then if AMD, Nvidia, and TSM are going to do fine, SMCI, which is a much, much smaller company, is also going to do fine. And that's why their stock is up 16% right now as well. Absolutely incredible. Oh, Chris in the chat says they make hardware that AI chips go into. Okay, so that's what they do. So not necessarily design, but they make the hardware that the AI chips go into. Well, okay, so I haven't looked at ARM stock price in weeks. I'm going to guess before I type in ARM that it's at $80. I'm going to guess that ARM's at 80. All right, here we go. Where's ARM? 74. Okay, a little bit off, $74. IPO'd at 51, so still not bad if you bought at the IPO. But yeah, ARM should be seeing some momentum from this as well. ARM is just by sheer exposure to the semiconductor space, you would imagine ARM is getting some momentum. SMH, which is the semiconductor ETF, should be up. Yeah, that one's up. What is it up year to date? SMH. What is SMH? This is the thing Michael Burry was shorting. I don't know if he's still shorting, but he was short this ETF. that is short has not gone well. It's up 23% in the past 3 months. Year to date, it's up 7%. And QQQ, by comparison, year to date, is up 3%. So SMH is outperforming QQQ year to date, and QQQ has the Amazons and the Metas of the world, all that stuff. And then the S&P year to date, I think that's up like 2% as well, right? That's up 1%. So S&P is up 1%. SMH is up 7%. QQQ is up 3%. So starting off January, SMH seems like the ETF that's winning, and that's doing well. Let's check if we're doing ETFs. Let me do ARK real quick. ARK year to date is down 11%, and then Meet Kevin's PP ETF is down 4% year to date. So, and Enphase and Tesla are hurting him on that one, even though Nvda has been doing well. He's heavier Enphase and Tesla. So, yeah, that's how some of these ETFs are performing. Let's go back to Palantir. How's Palantir doing right now? Palantir at $16.34. Okay, so Palantir is getting sold off a little bit. PayPal, nice recovery, up 1.68%, $63.13. Tesla $211. Nvidia $575. S&P $477. Robinhood getting sold off $10.49. Robinhood getting sold off with Bitcoin. That's what's happening with Robinhood. So Bitcoin at 40,889. Look, a lot of charting analysts that I've been looking at are saying Bitcoin goes to 38. I mean, maybe it goes to 38,000. Who knows? But right now, it's struggling above that 40,000 level. ETF absolutely was sell the news. So it was sold off on the news, and it has come down. Now, you got to see more inflows coming in, and I don't know where those inflows are coming from. Obviously, the halving event is going to be important, but you got months until that plays out. So we will see what happens from there. SoFi getting hammered again, down 1.34%. Look, I think they're going to be profitable in 10 days, and it's going to be exciting for them to be profitable. I just hope the market actually cares that they're profitable and doesn't just, throw them down to gutter. CleanSpark getting demolished again, down 2.76% on the day. Bitcoin falls, the Bitcoin miners get destroyed. All the Bitcoin proxy plays get destroyed as well. Enphase 106 now as well. All right, not too bad. Not too bad at all. We got Alex Karp in the chat saying F China. Thank you, Mr. Karp, for watching the market open. Actually, Karp talked about China yesterday on his podcast, or on his interview that he did, and he was definitely not bullish on China. So I reacted to that yesterday in the live stream when I was reacting to it. Again, real quick, shout out to new channel that is coming out at 10 a.m. The new podcast is launching in literally 18 minutes. I'll launch it live with you guys on the channel. That is the channel, Macro Interview Analysis, Meet Kevin podcast will be launching on this new channel. Please subscribe if you are interested in macro and interviews from me on the channel. Okay, let's talk a little bit more about Apple, and then I want to talk about some Fed interest rate stuff. So JP Morgan came out with a good note today that said they are projecting that the Fed is going to start cutting in June, not September, which is actually really nice to see, because they were first projecting it was going to be in September. Now they're projecting it's going to be in June. So you're at least seeing a little bit more excitement that the rate cuts are coming soon, but definitely not the excitement that rate cuts are coming in March. Let's take a look at the CME Fed Watch tool and see what they're projecting when it comes to rate cuts. And then we're going to look at the 10-year as well. Meta just hit an all-time high. Steve put that in the chat. There we go. Meta hit an all-time high. That's great. That's like third day in a row. Okay, so for March, oh, wow. It has gone down dramatically. It was 77%. Now it's 51%. So we've dropped from 70% of analysts thinking to 50% of analysts that we're going to get that rate cut. In June, it's about 80% of people, 80% of analysts. And in May, it's about the same, about 80%. So June and May seem optimistic for the cut. March's optimism has declined. March's optimism has definitely declined. So that makes sense when we're seeing the 10-year. The 10-year treasury right now, yeah, look at that. Look at this 10-year. This 10-year is mooning. I mean, I'm being hyperbolic when I'm saying mooning, but look, we were at 3.85 2 weeks ago. Now we're at 4.176. I mean, that's basically 4.2 if you round up. We're at 4.2. So 4.2 on the 10-year, 10-year goes up. Equities don't necessarily have the most juice in them to keep continuing to gain as much momentum as you thought they would get. Oh, wow. Here we go. We got some other new news now that we're doing some macro stuff. Money market funds. I just opened this live. Very interesting. Total money market fund assets, this was updated yesterday, decreased by $14.12 billion to $5.96 trillion as of January 18th. So we had two decreases in December of money market funds. We went from 6 trillion to 5.76 trillion. Then we had 3 consecutive increases of money market funds since the second to last week of December. And now we have our reversal in trend to a decrease. This actually makes sense because we are seeing a lot of money get propped up into the Qs, into the NASDAQ 100. So, I mean, 14 billion at the end of the day is very inconsequential to 5.96 trillion, but it is interesting to see a decrease. Whereas on January 11th, there was an increase of 15 billion. Now that same money just came right out of those money market funds. Maybe they went into equities because maybe people are like, you know what? I don't want to actually miss out on the 2024 run if there is going to be some 2024 run. So we are seeing a little bit of momentum there on the downside to money market funds. Tesla goes green. Does Tesla finally go green today? Tesla is green at 212, folks. All right, on a Friday. It's interesting too. On a Friday, we're not really selling off too much. You would imagine, we would have worse sell off on a Friday, but Tesla is doing okay. Not too bad on Tesla right now. Okay, let's see what I wanted to show you guys here. There's a couple of different things. Okay, let's do the Apple stuff. Let's do Apple. So we talked a little bit about Apple in the morning. Let's get a little bit more coverage. Bank of America upgraded them to 225. Obviously, very important for the broader ecosystem. Apple is 7.3% of the S&P 500. If you have a 401k, a lot of your money is probably in Apple. So let's get a little bit of coverage on what the launch of the Vision Pro means today. And let me know in the chat as well. I would want to know if 1 out of the 700 people here today are ordering the Vision Pro. Because if no one is, not 1 out of the 700, that's not good news. All right, here we go.
Earlier this morning. So I want to ask you, you seem most impressed by the entertainment and cinematic capabilities of this new headset. Big deal, little deal that we're seeing YouTube, Netflix, and Spotify say, we're not creating apps.
Yeah, it's interesting because, I was talking about this last night. The whole idea of the metaverse, as Meta had defined it, and a lot of companies were talking about it, was this cross-app ecosystem of devices and apps working together. And it's hard to tell whether this move is, or if they're going to pop on there later or not. But, is this the beginning of a new turf war in a new space? And certainly Google is expected to come out with its own mixed reality headset. And a lot of other companies are working on things. Meta's got stuff, and Meta's apps apparently are not on there at launch either. We'll have to see. And I think that's a big question mark. Also, what you'll be using on it. I mean, this is literally day zero of the headset. So yeah, it is interesting to watch.
So give us a sense, if you can give it a grade, the experience that you had so far, what would you give?
As far as the audio visual fidelity and the technical element, it's like a 9/10. This is something that has not been seen in headsets that I've used, and I've used all of them that I can think of. But this type of micro OLED technology that's in here, incredibly vivid, incredibly high res, will be showing up in other headsets down the road. Sony's got a business related one that's got a micro OLED display. So it's really, really good, and finally reaches a fidelity that will be like cinema quality, and that's an impressive benchmark. And I think the hand tracking part, you look at AR headsets like Microsoft HoloLens, things that tried to be business focused, they were all trying to do this too, with very little success. And relatively,
yeah.
And
I think you said you had a couple of difficulties yourself trying to do it yourself, but you didn't know if it was you or if it was the device. We'll have to wait and see on that. So, Jason, I don't want to leave you out this conversation. Scott saying it's a pretty cool toy, basically, at least right now. Great visuals, great fidelity, as he mentioned. B of A upgrading Apple on some enthusiasm over the headset and also AI in general. Give us a sense. Is this really a big deal for the stock itself? Some people have compared it to an iPhone and the release of the iPhone. Do you think that we're going to see real adoption of this headset for Apple?
Yeah, I mean, that's the key question over the next 5 years. I mean, if you listen to Tim Cook, he's pretty excited about it. He says he's using them daily. He says that as far as
yeah, that means nothing. If the CEO was not using his product daily, that is not an argument. It's just not an argument. I wish some of these analysts actually gave better arguments about the Vision Pro itself, not just what the CEO is propagandizing.
A shift in the consumer, this can be as big as iPhone. And look, I mean, that's a big ask. I mean, iPhone is still about 55% of Apple's business. So no matter what happens at the launch here, this is a tiny part of the Apple story. But there is a big opportunity in these AI, AR glasses. I mean, look at, for example, Meta's Wayfarer glasses. I think that's kind of an interesting, perhaps, peek into where this could go for Apple. Right now, it's going to be used in the home. They basically look like ski goggles, but they're certainly like a better design than most of the other things out there, like Oculus, etc. But they're going to be used at home for entertainment. It's going to be used at home for communication, even some enterprise productivity. But eventually on the street, these AI glasses can certainly move the needle for Apple. We have to remember Apple's business model is multiple consumer touch points at the device level, so they can sell more services. This certainly folds into that business model. So I think there's a big opportunity here. It's the first product category for Apple since the watch in 2014, or arguably maybe.
Yeah, again, guys, remember, if you're just new, if you're just joining the stream, we talked about in the first 10 minutes that Google, YouTube, Spotify, and Netflix are not creating native products for the Vision Pro. And that's because I think they have zero incentive. And if I'm YouTube and I monetize through ads and I have no idea how the ads are going to look on this like Vision Pro, and my advertisers, which I have a fiduciary duty to, are, like actually getting the result for their ads. How do I know? And the content creators are going to get, a similar type of views. Like, how do I know what YouTube looks like on a Vision Pro? And I think Apple's given them zero clarity about that. And they just said, hey, you should be the first ones on the platform. And they're like, no, because we don't even believe people are going to use this shit. So we don't think people are going to use this shit, and you're not really making it at a price point where it's affordable enough for massive amounts of people to use this shit. We're not even going to waste our time and energy and, burn resources to try to build something for the Vision Pro. Number one, maybe because we're building our own device, Google, you never know. But number two, it's because we want to make sure that we can monetize effectively on the iPhone and the computer. And that's what we've been doing. And we don't want to disrupt that. So let's say the Vision Pro sells 100,000 devices this year. Let's give them 500,000 devices. Is it really worth building a native app for 500,000 people that probably aren't even going to use it every single day? Because if they're not using the headset every day, they're definitely not going to use YouTube on the headset every day. So I think it weighs over a pound too. Yeah, dude, it's like, this is stupid. This argument is all stupid. I will gladly admit I'm wrong if the Vision Pro succeeds, but I've been so bearish on headsets as a consumer product for so long. Also, have you guys seen this shit, dude? This thing happened last night. Have you guys heard of a rabbit? Not just like, not just like the animal, but I'm sure you guys have heard of rabbits before. We have some rabbits in my neighborhood. They're always like jumping around and shit. The rabbit device, this new hardware device, that's just like weird, dude. Like, they sold 50,000 units, bro. The fifth batch of 10,000 Rabbit R1 devices has sold out. Pre-orders are now for the sixth batch. They sold 50,000 of these units. It costs $200, so it's the cheapest like AI wearable device that's out there. And I said, I am very happy for the company selling 50,000 devices. I have no hate towards the company. I'm just very confused how 50,000 people thought they would actually use this thing. Someone said, oh, I bought it for my kids because it's better than a phone. And I responded, no. It doesn't replace the phone. You need the phone in your pocket if you're going to use this, which means it's just an app on your phone, but they're trying to frame it as like, oh, you can talk to the device and like the device will talk to you and you don't need to like touch a screen. If you want to play a song, you can just tell Spotify to play a song. And I'm like, okay, but if I need to hold my phone with me, then it's not like I get rid of my phone. It's not like I lose that experience. I'm just very bearish on natural language processing and audio as the medium by which people say things to be able to get things done. I am just more bullish on touching things to be able to enhance productivity. I don't think at a subway, in a crowded subway, you're going to be like, hey, rabbit, play Billie Jean by Michael Jackson. It's like, no, you're going to go to your phone. First of all, that's awkward and weird. And people are like, why are you listening to Michael Jackson? Like, it's like weird. You just go to your phone, go to Spotify, you touch Michael Jackson, boom. I'm just so bearish on this. Like, maybe I'm wrong on how the phone is situated, but I think it has a strong lock on us. And I don't think people want to break out of it. But 50,000 people ordered this shit. Now, granted, the 50,000 people that ordered this, just like the 100,000 people that might pre-order the Vision Pro today, they might just be the techno optimist enthusiasts that are going to buy the newest shit that comes out. That's very reasonable. There's probably, I would say, a couple million of those people around the world. But that's it. I mean, the masses, we're talking about billions of people, I don't think care that much about this type of little device. So it's, I don't think it would work. You touch Michael, dude. I mean the song. Goodness gracious. Billie Jean by Macro Jackson. Yes, Billie Jean by Macro Jackson. It's just so weird, dude. It's just, Amit, have you watched Ready Player One? This is where we are going with headsets. I disagree, dude. I don't think that's where we're going. I do not think we're going into a Ready Player One world. I really don't. I don't think it's happening. Meta, by the way, 52-week high, 379 right now. I don't think that's what's happening. I think everyone thinks that's what's happening. And I'm like, no, I don't think this world that people think we're going into is happening. I just really don't. And maybe I'm totally wrong on that, but I don't think that's the future. I think the future is on this phone. Still, I do. I really do. And maybe when the Vision Pro costs $1,000, then yeah, but like 3,500, it's just not yet. Why not? I just don't think people want to stay on a headset all day. I don't think people want to do that. And now you can make the argument, oh, people don't want to be glued to their phone all day. Yes, I get it. But there's a fundamental difference between wearing a 17,000-pound headset, I'm being hyperbolic, but and walking down the street with a cord attached versus being on your phone. And so you look at the life cycle of a user's attention. Maybe you get some people throughout the day that spend like 30 minutes on the device, or maybe they spend 2 hours on the device. That's not daily. That's probably for an event, for an experience, watching an NBA game. Maybe you're watching some Disney movie, but that's like once in a week. And the only way you use it daily for using it for work. And I don't think enough people want to have some random thing on their head and start playing around the magical piano with their fingers as if they're working. I just think the computer is more efficient. And maybe I'll be totally wrong on this, but as of now, I don't see this. I really don't see this vision. Granted, Apple's probably going to sell a shit ton of them, because if Rabbit can sell 50,000 devices, you're telling me that Apple can't sell the Vision Pro? No, Apple's probably going to sell the Vision Pro. If a Rabbit can sell 50,000 devices, Apple will definitely sell. The question is just, are they actually going to be able to get the job done? Okay, cool. So I think that's it. I think let's do this now. We got about 4 minutes until 10 a.m. until the channel launches. I think we'll just launch the channel right now, and I'll play you guys a clip of the channel while we're on this show. We'll do the Palantir clip. You guys want to do that? And then if you guys want the rest of the interview, you can watch it here. So here we go. The channel is in the chat. Thank you to 345 people that have subscribed. There is the channel. Chris says, BTW, there's a sex toy called Rabbit. Okay. Well, that's great branding on their end. Definitely going to get some searches from that. There's the channel. I am publishing the video live. You guys are going to see it right now. Let me share my screen. Let's get to this video and let's do it live, baby. Let's do it live. It's the Bill O'Reilly thing, if you guys remember. Okay, let's do it live. Here we go. There it is. Unlisted, going public. Why can't I make it public? Allow me to make it public? Oh, here we go. Okay, public and save. We are live with the first biggest interview of my life, the Meet Kevin interview. It is officially live on the channel. Link in the description right now. And let's listen to what he had to say about Palantir. Let's listen to what he had to say about Palantir. We'll do that clip, and then you guys can check out the rest of the interview if you want to check it out on that channel. All right, here we go. Here we go. Go. Let's do it. Let's pull it up. I think you guys are gonna enjoy the quality too, dude. The HD quality, it's good shit, good quality. All right, how did this outfit come together? I decided I wanted to wear a suit. My hair was being crazy. I was like, let me wear the hat, and then it turned into an outfit. The headphones, I think, just kind of completed the outfit. It made it look very podcast vibe-ish, and there it is. That's what we got. Okay, so all the timestamps are there. We talked about Palantir right here. Let's talk about this one. Let's go to that one. All right, here we go. This is his 4 minutes on what he thinks about Palantir.
I like Palantir.
Why did you buy Palantir?
To the stock market that they just don't want to be a part of it anymore.
Right.
Yeah.
One of my favorite stocks, Palantir.
Oh yeah, I like Palantir.
Why did you buy Palantir at $18.83?
Yeah. So Palantir, I think, is the only profitable AI play that exists. I think Microsoft is like faux AI.
Really? You think Copilot is faux AI?
Yeah, I think most of it is gimmicky. It's sort of like label it on and attach it on. Like it's like bolt-on AI.
Right.
So, but to really get think about this. What was AI before AI was AI? It was big data.
Correct.
Who was doing big data analysis? Palantir.
Right.
So Palantir didn't even have to change anything. Palantir's just like, we're just going to keep doing what we do, which is basically now AI. So
right.
It's, commercial AI for freight, shipping, logistics, or policing, or scheduling,
government side of the business,
whatever, right? You've got everything. Intelligence. It's fantastic. So that's just like AI. That's always been AI. Then you've got bolt-on AI, which is like, yay, page, like your, Microsoft Word or whatever can now include, whatever Bard or
Right.
Google Bard, Copilot would be the more Microsoft one, and you got GPTs.
Right.
I don't think that these competitive, and Grok with Twitter or X, I don't think that these competitive services are anything more than having like a voice assistant. They're going to become so monopolized that there's not really going to be a premium. It's kind of like you have it or you're a loser. So in other words, you're not going to get an incrementally greater amount of profit because you have it, because everybody has an LLM.
Right.
So I don't think LLMs are where the money is. I know the GPT revolution was pretty wild when it was like AI in the hands of consumers. And there are a lot of people who pay $20 a month, myself included. Do I think GPT, for example, is worth $100 billion? Hell no.
Right.
Like all of these are going to compress in valuation. There'll be an AI valuation crash. I'd much rather be in the chips or in Palantir than in like the nonsense AI that I see. I think Microsoft valuation's ridiculous. I think it's just a safe place to say we have AI exposure. Salesforce is another one of those.
So he has some more stuff to say, but let me break that down real quick. I thought this was incredibly interesting, dude. He's basically thinking that Microsoft and Salesforce and some of these other companies have propped up AI valuations. He thinks Copilot is bullshit. He thinks, making Microsoft Word or Excel a little bit better is not real AI. Now, granted, I do think they have other elements of AI that are going to bring top line revenue growth to the business. But in general, he's thinking that the benefit of AI is at the enterprise and building the AI infrastructure to implement all of these LLMs. He's 1000% correct that LLMs are a commodity. That he's completely correct on. And he's making a bet that ChatGPT and their LLM is just going to be another commodity. And the real value is in implementing that commodity into the enterprise, which is what AIP is doing. And look, that's what Alex Karp believes as well. That's what Kathy believes. That's what a lot of these bigger institutional investors that are betting on Palantir believe. That's what a lot of retail investors like myself believe. And I think we're right about that. Is Palantir going to execute against that? I don't know, but I think we're right. And so that is why, Palantir at 30 billion is a little bit more attractive than Microsoft at this point, almost 3 trillion, when they haven't really shown AI in their earnings numbers yet. So you think LLMs are a commodity. What's not a commodity is the actual implementation of the AI infrastructure, particularly for enterprises. And that's where Palantir is kind of winning.
Well, yeah, because I think most enterprises don't even know what to do with AI.
Right.
That's the problem. It's like everybody can say they have AI, but like, okay, like Walmart, what are you going to do with AI? Well, we want better scheduling or logistics. Palantir. We want all of our cashiers to use GPT. No.
Right.
You see, like the actual finding, like AI is great. The problem now is, how do you use it? How do you actually implement it and turn it profitable? I don't think anybody knows how to do that better than Palantir.
Do you think the government business is scary given the shadowy political nature that the media tries to cast on Palantir?
Oh yeah, I'm sure there's a bunch of shady stuff, but that's part of the business,
right?
It's like if the CIA is like, here's our database, give us some analytics. Of course, Palantir's gonna have some crazy connections, but I mean, so
right,
like it is what it is. Yeah.
Final question on Palantir. Alex Karp, how do you think of him as a leader? And Peter Thiel, not on the day-to-day of the operations, but the chair of the board.
I have nothing bad to say. I think they're both very intelligent individuals, and I think they made the right moves by getting Palantir to where it is today.
Okay. That was what he had to say about Palantir. I actually want to react to a couple other parts. If we're here, we might as well react to like another 5-10 minutes of it. So I'll play you some other good stuff that he said. But look, on his comments about Palantir, I think he's right about LMs being commodity. In terms of the government business, the shady stuff is more so the context of like his argument. Basically, you can take what he said and summarize it like this. Defense spending needs AI. They're going to do things with AI that are not the most friendly to say, like AI-based drone targeting. Google didn't even take up a $229 million Maven contract because the employees didn't get their Starbucks on time, and they, got so mad that day that they complained to Google, "Hey, you can't take this government contract. You're going to be, using AI for drones, and our Starbucks didn't come in time." And then Google was like, "You're right. Your Starbucks didn't come in time, so we got to make sure we don't take this contract." And that's where Palantir swooped in. So when he's talking about the shadiness of them, he's saying they're going to do what the government wants them to do, which in the context of defense and Western values, that's, the argument for Palantir. Now, obviously, when Trump said, "Hey, we're going to do a Muslim ban. We need a database of all the Muslims," Karp was like, "No, we're not doing that shit." Right. He's talked about this, but he's like, "No, we're not doing that shit, but we're doing the shit that actually protects, values and make sure that democracy is protected. We're not doing some, Muslim ban stuff. So from that perspective, I think his argument is just that the government business is very sticky and that they're going to be able to do what CIAs and government institutions want them to do. And then finally, in the context of Alex Karp and Peter Thiel, he's like, yeah, they're good leaders and he's willing to take a bet on them. What's another clip I can show you guys? There's a ton of good stuff in the interview. I showed you guys the SoFi one yesterday. Oh, here's a good one. So was buying Tesla, or can Elon 10xx? Let's do that segment. That's about a 10-minute segment, and then I'll get you guys out of here. The rest, you guys gotta go to the channel, please. Watch the rest of it. But we'll do this one. Can Elon 10xx? I thought this was a fascinating discussion on his perspective on Twitter. Let's listen to this 10 minutes, and then we'll be out of here for the market open. Thank you, everybody, for being here. Here we go. About 20 billion. You don't think it can get to 200 billion in the next decade? Just do right here.
Deflation.
Can Elon 10xx?
No.
Really?
No, I don't think so.
So X, I think right now is valued on private markets by Fidelity about 20 billion. You don't think it can get to 200 billion in the next decade?
I mean, I'm hopeful because it might mean he won't have to sell more Tesla stock. But no,
but you said no immediately. So you've thought about it and you don't think he can pull it off, at least to 10x.
No, because it would have to be generating so much. I mean, really, so let's use the 20x multiple, right?
Right.
So to get to 200 bill, I mean, we'd have to be, so 10x would be 200 bill.
Be 20 billion a year, so 5 billion a quarter, essentially, of revenue.
20 bill.
Right now they're doing 4 billion a year, 2.6
Oh,
billion.
yeah. Yeah, I mean, the problem is, it's just it's become such a unfortunately like platform that's difficult to advertise on for so many advertisers, and I'm not convinced that the advertisement that occurs on X is actually very profitable. I'm not convinced by that. So maybe that could change, but I think it's very difficult to take a scrolling user and turn them into a conversion.
Right.
So I think you can use, so this is not like getting political. It's just like literally the mechanics of a scrolling app, just like eHack, the scrolling app. I don't think it's very easy to advertise off that platform and get people to turn into a converted buyer.
But Instagram does that very well.
I don't know that they do that very well. I know that they get a lot of ads.
I disagreed with him a lot on this. I mean, Instagram, to me, I think that they do ads very profitably, which is why the advertisers keep coming back.
On their on Facebook,
right.
Which I guess you could say that's scrolling, but then again, there's a lot more clicking on Facebook.
Correct.
You know, a lot more linking and profile checking and groups and all this kind of stuff. So I'm not sure that Reels are that profitable. Just like, and we don't know, we'll never probably know the real numbers, but I also don't know that TikTok is that profitable.
Right.
I know they like.
He's right about that. TikTok ads suck. They're making money off their like e-commerce shop business, but the ads are just not the best.
You know, they receive a lot of money, you know, from the Chinese government. I mean, I'm sure they make plenty of revenue, but I wonder how much money is actually kept. So I don't know. Maybe I don't know enough about the ad space for the scrolling ads, but I'm skeptical that you can really get enough conversion to justify the ad spend that they're looking for.
Do you think there's any other source of revenue outside of it? I mean, do you think the premiums, do you think it could become such a beautiful platform that it could actually grow from that?
Yeah,
side?
I think getting people to pay for it is useful. It represents a fraction of their revenues now. I want to say it's maybe like, what, 10% or something
maybe
like
less
that.
than that,
Yeah, probably. So yeah, they could grow that. You could get user growth. Yeah, it's going to be tough because, you know, the people who left, it's going to take quite a while for people to want to come back. And you could go for new user growth, but you know, a lot of new user growth comes from international.
Correct.
But international, you know, you'd have to basically lower your entry fee. You know, in India, it might have to be $1. And in certain parts of South America, it'd have to be the equivalent of basically like 30 cents a month or whatever.
Right.
Just to be an roughly equal burden. So I don't know if that's going to be enough of a profit. So I don't know. I think scrolling platforms from an ad point of view are a nightmare. They're good for maybe branding. You know, as you're scrolling, you're like, you see Disney over and over and over again.
And so there's a brand impression on,
Right. But that's hard to measure. So yeah, I don't know. That's challenging.
Do you think he actually bought Twitter for free speech, or he bought it because he wanted a megaphone to make sure that Tesla could never go under if there was too many mainstream media narratives around it?
Well, I think Elon is really good at reading the room of society. And so he he knows how to brand things to be very desirable to a specific audience.
Yeah.
And so I think the best way to brand the oopsie doopsie purchase of Twitter was, oh yeah, well, there's no price to free speech. Okay, like how do you argue that, right?
Right.
It's perfect after the fact branding. I don't think that was his intention. I think he had desires of whether that was building out language learning, networks.
And he needed data, right?
Yeah, exactly. I think that was the primary motive, especially since I'm certain he knew GPT was coming well before everybody else knew GPT was coming.
Do you think Twitter actually does become the town square for free speech? I mean, this election cycle, I don't think we're going to see the level of censorship we saw in 2020.
Yeah.
And if it does, do you think that's a success, at least from that front?
Twitter failing would be very bad because it would be a reiteration to all the other more censorship prone platforms, whether it's Facebook or whatever it might be, to keep doing what they're doing.
Correct.
You know, I was censored by CNN and Facebook and Instagram during my campaign for governor. And these are organizations that donate a lot of money to Gavin Newsom. So censorship is personal to me, but I also try to look at it with a level head and I go, okay, yes, I love that. I know if I post something on Twitter, the worst thing that's going to happen is I'm going to get a community note.
Right.
Like I really love that. So I admire that. I think that's the right way to go. The problem is as soon as that gets proven to be the right way to go, other platforms are going to start using community notes. Other platforms are going to become more free speech, so to speak, with community noting. And so that's why I question X being the only. I actually think X is like an expensive model builder, and now other capitalists can come in and model after that and make like the free speech version without the political tilt.
Right. Do you think that in terms of new user growth, do you think the network effects on some of the other platforms you mentioned are just too deep? I mean, the CCP had to spend billions of dollars with TikTok just to get them off of Instagram. Do you think Elon, I mean, last time I checked, Linda Yaccarino said they were getting 60,000 users a day. I think Meta gets that like every other couple hours. I mean, like, how do you think they grow to get people to be on a platform that's really for influential thought leaders, not for Gen Z kids?
Yeah, it's tough. And I even question the thought leader aspect. I mean,
Really?
there's some,
I mean, you have 330,000 followers on Twitter. You don't think you're a thought leader on Twitter?
Well, I don't know. I mean, I certainly don't put my best thoughts on Twitter. They mostly go on YouTube, in my opinion. You know, who knows? Maybe my ideas are trash. I don't know. But I think the problem with Twitter is, or X, we'll call it, is you are incentivized to have a very, very, unless you have this massive reputation already, you're really incentivized to say something that is trendy or sensational and that's your whole message.
Correct.
I wish, and they're starting to, I think they're going in this direction. They're pushing more of the long posts, like time on post, rather than just like engagement.
Right.
I think that's the right way to go because it adds the nuance that's missing from X and formerly Twitter. But there are a lot of accounts that I look at. You know, they'll have millions of subscribers or followers or whatever they're called on X. And I look at the depth of their thoughts and I'm scrolling through. I go, where is a good argument here? Because all of it, like, it's basically like the worst of YouTube in a thread. So it's kind of like if you took every title on YouTube, that's all you're getting.
Right.
It's just the titles is what it feels like. And it's like, where's the nuanced discussion? And so it just pushes people into this echo chamber of whatever they want to hear. And I think it's actually a bad thing.
Do you value the 300,000 followers you have? Not saying them as people, but do you value that audience as a form of distribution, or you don't care that much about it?
Yeah, no, of course. I mean, I value the people. As far as distribution, I mean, I'll multi-stream to X. I think that there are some things like I like posting pictures or like.
I mean,
those
you're posting your YouTube videos on X, so
sometimes
there's some value you see in.
I actually don't know that is true.
Right.
So that's part of my experiment right now. And so what I find is I'll post a video on YouTube and I'll post a video on X, and then I'll look at the two, and then X is like, oh, I got 20,000 impressions or whatever. I look at the analytics, and the view retention is like, 30% 30 seconds, and then like 2% 1 minute. So it's like, okay, great. So out of, 20,000 people, maybe like 400 are actually watching past a minute. Well, on YouTube, it's the complete opposite.
Yeah.
I think it's just the mindset that people get into when you're on a scrolling feed. you're looking for quick, and you're looking for less nuance. You're
Right.
looking to be entertained, quick thoughts, quick reactions, quick news. For that, it's great.
Right.
For nuance, it's not. I mean, it's like I was on TikTok. Gosh, I try not to open it because it's so addicting. But I went on TikTok and I was watching this TikTok, and I'm like, oh man, this thing keeps droning on. And I look down and it's like, I'm only a minute 30 seconds in. I'm like, it's TikTok, it should be over. And I look, oh no, it goes all the way to 10 minutes.
Right.
And I'm like, what is this? And I turned the app off.
Right.
Because when I opened up TikTok, I was in the mindset of, I've only got a few minutes. Of course, then you end up spending an hour on it, right?
Correct.
But you're in this scroll mindset. You're not there for nuance.
Do you think X has any chance of dethroning YouTube for video?
No.
Mr. Beast just posted his first video on X. He's going to publicly share his ad revenue. Do you think that, Elon is juicing up that video with as many ads as possible to try to incentivize people to keep posting?
He will lie.
Really?
100%.
Mr. Beast will lie.
No, Elon will.
Elon will lie.
They will funnel extra revenue on that on purpose. Because think about it. It's the best advertisement they could ever get.
Yeah.
First of all, that video was not an exclusive to Twitter or X. It was a repost.
Yes.
But not only that, I mean, look, I love Elon for the innovations he does, but he knows how to play the game. If Mr. Beast comes out and goes, oh my gosh, I made X dollars on YouTube, I made twice as much on X. Come on, man. It's literally the best free advertisement for Elon right there. So yeah, those numbers are, if I could bet money on it, I would bet money those numbers are going to be rigged.
So in the context of Tesla shareholders, do you think buying X was ultimately a mistake and a waste of time?
Oh, well, 100%. In the context of Tesla owners, X is terrible. It was horrible. I mean, Elon sold like $9 billion more than long retail holders bought in 2022. So I think long retail holders bought like 15 bill worth of Tesla shares. Elon sold 24.9. He is one of the reasons the stock is lower. Now, again, he's also one of the reasons the stock and the company has done what it's done. Right. So, like, I don't want to sound like an Elon basher. I love Elon. I think he's great. I think he's genius. But I also know he knows how to play the game.
Wow. All right. There it is. I think it'll be a fun interview. We talked about a lot more juicy stuff. We talked about Nvidia. We talked about SoFi. We talked about Robinhood. Talked about PayPal. He had dinner with Cathie Wood. We talked about that. We talked about how he, picks stocks for his fund. Talked about Enphase. Talked more about Tesla. Talked about Bitcoin, Coinbase. Bunch of fun stuff. Think you guys will enjoy. And thank you to everyone who subscribed. We got 411 subscribers so far on the new channel. Really, really appreciate it. It means the absolute world to me. Here's the video once again in the chat. And that's it. We're done today on Friday. Tomorrow I'll be live with what's his name? Steve, and we'll be discussing Starbucks on the channel. So we'll be doing that. And tonight, Palantir Weekly, we have a lot to talk about for Palantir Weekly. So Palantir Weekly, 11 p.m. Eastern, we have a lot to talk about. And then Daily Palantir episode will come out today. I'll probably be reacting to this Meet Kevin Palantir segment. So if you already saw the market open, you probably don't need to watch that video. But if you want to see some more analysis of me reacting to what he said about Palantir, that'll be out today. Okay, that's it. Thank you, everybody, for joining. It means the absolute world to me. Hope you guys have a great weekend. It is snowing badly in New Jersey right now. My mom and my sister work at a school, and schools were canceled. That's how bad the snow is. So stay safe if you are experiencing any snow, and enjoy the weekends. Hopefully get to spend some time with your family, friends, and have at least some time to refresh and relax before we get back into the new week. All right, everyone, have a good time. I will see you guys for sure. I'll be there watching the Starbucks analysis. Yes, Starbucks. We have to have you there. And sorry, I can't go yet because I got to do word of the day. Dude, I skipped word of the day yesterday 2 times and I messed up. And in the chat, they were like, you got missed word in the comments. I was like, all right, we got to do word of the day. So let's do word of the day real quick. Word of the day is sus or Russ. Dude, what the fuck is this?
Susurrus.
No, I call it sus or Russ, not susurrus. Forget that. A soft murmuring or rustling sound, a whisper. Okay, so the wind rustled through the trees, creating a gentle susurrus that echoed in the forest. I like saying sus or Russ, so this is sus or Russ. So now, if I ever whisper, I will be saying, guys, I'm about to sus or Russ. That is the word. So that's the word of the day. All right, everybody. I'll see you guys tonight for Palantir Weekly, and tomorrow for Starbucks DD and analysis, and we'll be back on the market open on Monday morning. Bye, everyone. Have a good one. Sus or Russ. That was a funny one. Bye, everybody. Have a good weekend. Good night.